Alright, look, no matter what market you trade, Forex or futures or stocks and options, okay, I think every trader out there has tried to navigate between trend markets and chop markets, okay? And as you've heard me explain to you repeatedly in almost all of my videos, all right, you are going to make 90% of your trading income is going to come on trend days. And by that same token, whenever the market chops around, you're going to give some back. Okay, this is the truth on day trading. Again, regardless of any market that you trade, Forex, futures, stocks, and options, what you guys have to realize is the market can only do these two things. It can either trend or it can either chop. When it trends heavily, okay, the goal is to get in on that trend and squeeze every single tick or pip that you can out of that trend, because inevitably the market's going to chop, right? And then after the market is done chopping around, it's going to cycle back into trend. So listen, folks, that's it. Okay, if you can wrap your head around this concept on trend versus chop, and you're using a volume indicator to predict the trend and get the direction right. As you can see here, these color bands here on the chart is the volume indicator. It's amazing, does a fantastic job. I'll get to this in a few moments. But listen, if you can master this concept, if you can wrap your brain around this concept, folks, I'm telling you, again, no matter what market you trade, okay, when you embrace this concept, you're going to have what I call the light bulb moment. And it's at that moment in time where your trading journey and your trading endeavors are really going to accelerate. You understand what I'm saying? So let me give you a working sample, a working case study of what I'm talking about when I say trend versus chop, and more importantly, what I mean when I say 90% or probably more, okay, of your income, of your trading profits is going to come on those trend days. And how you measure success in trading is at the end of each trading week, typically on a Friday or Saturday. If you've mastered this concept, then you're going to see your trend profits far outweigh any chop losses. Makes sense? That's just the nature of trading, folks, okay? Big winners are going to far outweigh small losers, and the best traders in the world have recognized that fact and they embrace that fact. So let's get into some real use cases here. What you see on the screen right now, folks, is my proprietary custom chart style with my volume-based indicator loaded on top of the chart. All right, the volume indicator is essentially what turns these color bands green and red. And if you have no idea what is the volume indicator, then please go back and watch the most recent couple of videos that I had posted to the channel, and that'll give you an excellent understanding of how to use volume to really predict big moves in the market. Okay, so anyway, what you see on the screen right now is 3 consecutive trading sessions, and these blue lines right here that I've drawn on the chart represent, as you can see, the market open. Make sense? And the first thing I want to draw your attention to are the significant trends that appear on the chart. All right, let's go ahead and start with this one here, which is the first day here in the sequence. And let's go ahead and isolate the first trade of the session. Remember, this blue line represents when the market opens. And right off the bat, what you can see here is the volume indicator turned red, indicating that lower prices were around the corner. And you can see quite clearly with your own eyes, this was a fantastic short. In fact, this short was so powerful, this sell-off was so intense, it extended into the next session. All right, but this was quite clearly a trend day. Now let's look at the second of the 3 days. All right, market opens right here. We are still essentially in the previous downtrend, right? We're still in the previous session sell-off. So there's not much to do except to wait for, you guessed it, a trend change. And you can see here the volume indicator clearly and obviously turned green. Makes sense? So this is your clue, this is your signal, this is your notification that it's more likely than not that higher prices are now around the corner. And what happened after the volume turned green? Well, with your very own eyes, you can see what happened. It was a significant uptrend that started right here, okay? So we've essentially had 2 heavy trend days in a row. Now let's check out the third session here that I have for you. As you can see here, this blue line represents the market open, and look what happened in the entire duration. All right, let me zoom over here. This entire sequence of price action, okay, is the full 9 hours or 8.5 hours of the regular trading session. Okay? Obviously, the market went nowhere, and this was complete and total chop. There is no disputing that, right? Now, full disclosure, the vol did turn red right here, and we're kind of in the middle of a downtrend. We don't know if the price is going to keep selling off. We'll have to wait and see, but let's just pretend that the market is closed for the week and you've wrapped up your trading. All right, so watch me bring this home, guys. All right, when I draw this out right now, you're really going to get it, and that light bulb inside your head is going to go off. Watch this. Kaboom! What I just did here is outline the approximate potential profits, okay, in this specific use case, but you can extrapolate this to any market that you trade. Forex, futures, stocks, and options. It does not matter. This concept, folks, I'm telling you, this concept applies to any market. All right, and I'm actually using very conservative numbers here on those trend days. You know, I outlined 100 ticks, but the truth is the potential was a lot more than 100 ticks on both of these trend days. I'm only using 100 ticks, or for you Forex traders, 100 pips, just so I can use nice and easy round numbers in this example. All right, but now let me bring this home for you. Let me just quickly clean up the chart just like that and do some simple math for you, okay? So we looked at 3 trading sessions in a row, all right? 2 of those sessions were heavy trend days, and I kind of feel that's what you can expect on a 5-day trading week. I feel, just based on how the volatility has been this year, that, you know, out of every 5 days, you can certainly expect 1 or 2 heavy trend days where you're absolutely going to kill it, and then right after that, you're going to see some chop. Okay, that's just part of trading. But check this out, all right? 100 potential ticks on day 1, 100 potential ticks on day 2, minus 20 ticks in losses on day 3. What does this get you? Okay, simple math will tell you this is a potential net gain of 180 ticks, okay, or pips if you're following along in Forex. And if each tick is worth $10 or $12 or whatever the case is, you can do the math on how much this potential is worth on just one lousy contract. All right, I'm only talking about one. 180 times $10 a tick or $12 a tick. I'm going to estimate this again, folks. $1,800 potential on just one lot or one contract. Okay, imagine this math, okay, on multiple contracts, like 2 contracts or 4 contracts, right? But anyway, listen, what's the takeaway from watching this video? All right, takeaway number 1, guys, you need to use something that can help you identify the starting point of a trend, right? Not the middle of the trend, not the end of the trend, but the starting point of a trend. Now, my theory on this is using volume, all right? I've just been finding that volume is killing it on pretty much a daily basis in terms of identifying the trend, okay? And volume has been historically proven to work. And takeaway number 2, recognize what I just showed you a few moments ago with doing simple math. Recognize that your big winners are going to come on those trend days, and on those chop days, you are going to give some back. But at the end of each week, if you're following the rules and you're mechanical with your trading and you're diligent with your risk to reward parameters and you're implementing good risk to reward profiles, then folks, what you can quite clearly see is that it doesn't matter if the market chops around. It doesn't matter at all, right? Because the trend is always going to outweigh the chop. Does that make sense? And this is based on months and months, probably even years of back testing, okay? Volume works. Volume is really the only thing that I've been able to found that is a leading indicator, a predicting type of indicator, not a lagging indicator, right? Finding success in trading 100% depends on your ability to identify the starting point of a trend. Okay, look at this sweet sell-off, this beautiful downtrend right over here. Volume nailed it. Look at this awesome uptrend right here. The volume nailed it. Folks, these type of moves are happening on a daily basis. If you're serious about improving your trading, then you got to get off the sidelines and take massive action. All right, so listen guys, if you're interested in seeing a one-on-one demo on how to use volume to really improve your technical analysis, feel free to get in touch, call, text, email, whatever's convenient for you. Thanks for watching this video recap on navigating trend markets and chop markets, and I'll see you on the next trade.